Bank of India Multi-Cap Fund. Should you invest in this BOI Multi-Cap Fund? Will it help you create wealth in the long run? And what kind of value is it going to add to your investment portfolio? Let's talk about this in detail in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to take the right financial and investment decisions so that you can reach your financial goals faster and smarter. In order to understand if you should invest in this fund or to avoid this fund, you have to understand what is basically a multi-cap fund. What is a multi-cap fund? A multi-cap fund is a type of fund in which the collected money from the investors will be invested across different market capitalization. It will be invested in large cap stocks, it will be invested in mid cap stocks, and it will also be invested in small cap stocks. And this fund is mandated to invest 25% in each cap stock, like 25% in large cap, 25% in mid cap, and 25% in small cap stocks. The remaining 25% can be invested in any of the capitalization or in any combination of these three capitalization based on the fund manager's market outlook. This NFO opens on 10th February 2023 and closes on 24th February 2023. This fund uses S&P BSE 500 TRI as its benchmark on this index. You can also start investing in this fund with a minimum of 5,000 rupees. There is no entry load charges in this fund. You can also invest in a monthly SIP with a minimum of 500 rupees. This fund is managed by Mr. Nitin Gosar. The investment objective of this fund is to provide investors with opportunities for long-term growth in capital appreciation from a diversified portfolio of equity and equity-related instruments across various market capitalization. Now let us look at the investment strategy of this fund. This fund provides diversified allocation across market capitalization as per SEBI mandate. This fund looks for the viability of the business than the sector of the operation, meaning this fund will choose the bottoms-up approach and it will give importance to the company than the importance to the sector, not vice versa. It focuses more on undervalued stocks. It also uses active stock selection as it's not a passive fund like an index fund. Yes, so this is an active stock selection fund. Now let's look at the potential merits of Bank of India Multi-Cap Fund. This fund eliminates sector bias because it is not focusing on top-down approach as it's focusing on the bottoms-up approach. So there is no bias towards any particular sector. It can also align with your long-term goals because the aim of this fund is to provide long-term capital appreciation. It also has the privilege of investment across different market capitalizations, as it can give you better diversification, and if one cap is not doing well and the other cap can do well, so that advantage can work in your favor through this Bank of India Multi-Cap Fund. This fund will also have exposure to large cap fund, so the risk quotient wise it is compared to a small cap fund or mid cap fund, this will have lesser investment risk. As it's an open-ended equity fund investing across market capitalization, we should give it enough time to generate high returns in the long term. By long term, what I mean is the market cycle will go through a period of changes like a period of no return or negative return or a period of high return. So when the market cycle completes in 7 years, so if you stay invested in this fund for more than 7 years or in 7 years, it has the potential to generate high returns. And it also has the potential of maintaining a diversified portfolio. Now let us look at the potential demerits of investing in this fund. Because you're investing in large, mid and small cap stocks, this fund may over diversify in more number of stocks, which can lead to dilution of the overall returns. The fund management style for this particular fund is unknown. Are they going to follow the value philosophy, or are they going to follow the growth philosophy, or are they going to follow the buy and hold, or are they going to follow the momentum strategy? All these things we just have to wait and see, because this is an NFO and we do not know what kind of style the fund manager is going to apply in this particular fund. And this NFO has no track record. As it does not have a track record, It is hard for anyone to analyze how this fund will perform during market crash or market recovery period or during market correction. Or also when the market has touched all-time high, it's hard to determine how it's going to perform without any track record. So as we cannot analyze its performance during these periods, it's hard to take a calculated risk. So if you're going to invest in this NFO, it's going to be a blind risk. And we also have no clear idea about the stocks to be selected. Like if it's an existing multi-cap fund, we will have a portfolio. So we will know what kind of sector they have given allocation to and what kind of allocation they have given in each and every sector and what kind of stocks they are going to choose or they have chosen. Everything will be available. So we can evaluate the portfolio and have an outlook on the fund. But it is not possible in this particular NFO as it has not created any portfolio. So it's risky because we are not going to be able to take any calculated risk. It's only going to be a blind risk. So now let us look at the final takeaway by analyzing this fund. Now if you're thinking if you should invest in this fund or not, it completely depends on you as an investor. Yes, if you're a conservative investor who is not willing to take any risk, or if you're new to investing, then if you can choose existing mutual funds that have track record for minimum of 7 to 10 years and choose to invest in them instead of investing in NFO where you do not know what kind of risk you are going to take. So if you are a conservative investor, it's better to avoid this fund and choose an existing mutual fund. And without proper portfolio and research investment, it's going to be risky for you. So it's better to avoid. And if you're an aggressive investor and you're willing to take a risk, then you might try this investment in an experimental basis with minimum investment. Like if you have spare money, then you can invest in this with that money and use it on an experimental basis if you're willing to take risk. So, and it completely depends on what kind of investor you are and what kind of risk appetite you have and what kind of time horizon you want to achieve your goals in. So that all factors into your investment decisions. And if you're still having any doubts, you can always consult with your financial planner to take this decision. If you have any doubts regarding the topic we have discussed in this video, please comment so we can get back to your queries quickly. Also, if you have any doubts regarding mutual funds or any insurance policy in general, then you can always book a complimentary financial consultation with one of our financial planners to discuss about it, and the link is in the description to book your appointment with us. And if you want to gain more knowledge regarding financial investments and personal finance in general, we also regularly conduct live webinars for which also you can register by clicking the link in the description. Also, if you like our content, please like, share and subscribe to our YouTube channel. Thank you.